Hello and welcome. This is a series called Better Call Saul, where we discuss what is currently possible that if it were impossible, or what is currently impossible that if it were possible would fundamentally change the way we do business as real estate agents. On today's episode, we will be talking about what if buyers can't qualify for financing in a traditional way. Here with me today is my co-host, Rachel Rio, broker owner of Rachel Real Estate in Chicago. She's been an agent for 18 years, has been on the Pro Standards Committee for 8 years, currently serving as the 3 times past chair. I feel like I should be like, and in this corner. No.
Right.
She is passionately nerdy about all things real estate and especially the rules.
Good morning, Jen. How are you?
Good morning, Rachel.
Good morning. Well, and with us today, we have Saul Klein, of the godfather of real estate technology. Saul has been licensed to sell real estate for over 47 years, and he was an original team member of Realtor.com, the creator of NAR's technology certification program, ePro, and was personally responsible for the first 500,000 listings to be displayed to the public on Realtor.com.
Just a few.
He also spearheaded listing syndication, which is the distribution of your listings to the consumer over the internet. Welcome, Saul, and let's dive into today's topic.
Great to be here.
I mean, I think we were coming with this topic. It was like, okay, the lending practices are tightening, but so give us some context and we'll dive into it.
Yeah, and then you started off perfect, right? Because our theme typically is what's currently possible, and if it were impossible, it would fundamentally change the way you sell real estate.
Right.
Well, currently you can still get buyers to qualify for conventional loans, but what if they couldn't qualify? Right. And we know every day, and I think the Fed's meeting today to announce again another bump in their interest rate. And when they bump that interest rate, then all interest rates around it will start to move up. And that means that credit card interest. So that means someone who might have thinly qualified before wouldn't. And then you bump the interest rate on the mortgages up. And so maybe for a lot of people, this is the case. 2 months ago, they could qualify for a new loan, and today they can't.
Exactly.
And so that's a growing number of people. So what do you do when the financing's not there? And that's the discussion we were having, right? What do you do when the financing?
Yes.
Right. And I think like as real estate agents, we've gotten away from seeking out additional solutions, right? So it's like, okay, can you qualify? No. Okay, then I'm not working with you. But there's like other ways. And I mean, you've like in the investment world where I came from, we live this. We're constantly, I mean, I've done owner financing on things, like we've done wholesaling, we've done a ton of other ways to like get money out of the, like everybody happy. And so like, what about, where was this prevalent? Like what decade? I would think like in the 80s for sure.
Yeah, in the 80s, actually, in the 80s for sure. Because actually at the end of the 70s.
Yeah.
And we actually, and you can't do this the way we did it then, but back then what we had a landmark California Supreme Court decision.
Okay.
Cynthia Wellenkamp versus the Bank of America. And there was a clause in the Bank of America loan that said if you transfer this property, if you transfer this property, then the loan is all due and payable. And
yeah,
so
due on sale clause. I think they still have that, no?
Well, so what happened in 1978 was Cynthia Wellenkamp went to sell her property. I don't remember if she was a buyer or seller, but there was a Bank of America loan and it had a due on sale clause, and she fought it. She said, no, this is not due on. It doesn't matter that there's a due on sale clause.
Yeah.
It doesn't matter. I have the right. And she got an attorney by the name of Fred Crane, who made his whole career around this. Fred Crane took it to the California Supreme Court and he won.
Nice.
And the decision by the California Supreme Court was state chartered savings and loans and national banks cannot call loans when the property is sold. Now, federal loans, that was regulated by the Federal Home Loan Bank Board, not regulated by the state of California. Federal loans, you could not go in and take those loans over. Now, I was selling real estate, so we would look, when we would go into the MLS book, we go to the MLS to look for properties, knowing that interest rates were getting up to 18, 19%, so people couldn't qualify for loans.
Right.
The best place to look for money is the money that's already on the property.
Right. The loan that's already there. And sometimes it's not in everybody's like best interest to sell it in that way.
Yeah. So in this case with this decision when the criteria for showing homes actually became does it have a state chartered savings and loan or national bank loan on it? Because if it does, then we can go in and take over the loan even if the lender says no. But if it had a federal loan, we had to go through, and they weren't allowing it. So you know what happened to all of the federal loans in the MLS book?
Yeah.
There was no sense in even showing those properties because people couldn't qualify. So we would research. We in the MLS would tell us, well, this is a state chartered savings and loan. So we had to know that. We had to look up what are the state chartered savings and loans, right? What are the national banks? Because the national banks were regulated by the comptroller of currency, and they fell in. So what we then learned is there's existing, and this is what people should look at today. There's existing money on that property.
Right.
And if people can't qualify with new money, let's examine the existing money.
But this requires us as real estate, as listing agents to ask questions, right? Like, who is your loan through? Do you have any other like loans or liens on the property? What do you owe? What's the interest rate? Is it
Can I
assumable?
review the loan documents?
Yeah, well,
no, you got
do
to
you
do that.
recommend that for agents to do that, or for them
that's what
to
I did.
like work with your mortgage
how
partner?
else are you going to find out if there's a due on sale clause or what the due on sale clause is? And they have due on sale clauses that are enforceable, but lenders don't want to call loans necessarily, right? And so the lenders might say no, but you're no worse off if they say no.
Right.
And but they might say yes. So again, if financing is tight, if I have a buyer that can't qualify for a loan, that doesn't mean they can't buy a piece of property.
But if I have a seller who wants to sell their property, sometimes if you do something that's I mean, I'm just going to call it creative for lack of a better word, but if you offer some type of creative financing, you open the door for more buyers.
You might even be able to sell your property for a premium.
Yeah, likely you can.
Because you're offering the financing, and you might be somebody who doesn't need the cash. So you might say, okay, I'm going to sell the property. I'm going to take my money and put it in the bank and get 0.5%.
Oh,
but if I carry back a second, right? So let's make up an example. A property's got is $100,000 property with a $60,000 loan on it.
Okay.
Maybe I got 20,000 in cash. I put the 20,000. Buyer puts the 20,000 down, takes over the $60,000 loan, and the seller carries. The seller says the other 20,000 you still owe me, but make monthly payments to me, and pay me 6% or whatever, some higher interest rate that they can get another. Right. So that's one way to look at that. Another might be that the seller doesn't want to sell because they don't want to have to pay large taxes on it.
Right.
So one way you might sell it is by an installment sale, which is by taking less of the money up front, and by taking less, you pay less taxes. So we call it creative, but you mentioned it, Rachel. Really, we're talking about alternatives to the current. And the reason we've got the current way is because of 2008, 2000, or 2010, 11, 12, and that situation. And so we had easy money. And so when you got easy money, what are you going to do? You're going to go after the easy money.
Yeah.
We don't have easy money anymore. So now you got to go back to the other ways in which real estate can be bought and sold. And this is a key piece. There's already financing on most property. If there's no financing, that means the seller owns it free and clear. They got a lot of flexibility.
So much flexibility. But this goes exactly to what we talk about every time. It's like, as real estate agents, we are moving more towards a consultative role. And with that, we have got to ask more questions and really dive deep into what is best for our client. I mean, this is like our fiduciary, right? We can't be one trick ponies.
And I think to your point, when you're acting as a consultant in that kind of role versus a kind of traditional sales role, you need to ask those questions of your seller, and then also be able to have some dialogue and scripting prepared for when they ask you, well, why do you need all of this? You know, explain to them why it is you're gathering all that information. Because I'm going to tell you one thing: if I went into a seller appointment right now and started asking all of these questions, I'd get pushback because I know no one else is asking those questions. So you either come off as nosy, but then at that point, well, exactly, you're setting yourself apart and explaining, hey, I'm not trying to get all into your business, but here's how we're going to secure a buyer, and here's what we need to know to be able to offer some alternatives.
So one of the things to build trust and confidence, it's all about trust and confidence, right?
Absolutely.
Right? So how do you build trust and confidence? One way is you demonstrate expertise.
Yeah.
Everybody knows
Absolutely.
interest rates are going up. Everybody knows properties are staying on the market. Even all the sellers, they know this, right?
Yeah.
So now you come
Right.
in, you say, look, here's the situation. Here's what's happening in interest rates. People can't refi. People can't get new loans. There are still ways to sell your property. To do that, here's the things I'm going to have to do to be able to figure this out. By the way, most of my competitors don't understand how this works.
Right.
If you asked them what a
Exactly.
second was, they probably couldn't tell you. If you asked them what
Right.
a
Right.
sleeping second was, they couldn't tell you. If you asked them what an all-inclusive trust deed was, they couldn't tell you. If you asked them the difference between subject to and assumption, they couldn't tell you.
Right.
You're a real estate
Right.
professional. You should know all of this. And I would say to people, and by the way, if you're interviewing anybody else, you might want to ask them some of these questions because these are
Right.
critical to moving your property today.
That's like my
Absolutely.
favorite trick as a listing agent is like, here's the questions. Here's a list of the top 10 questions to ask when interviewing agents. And like, of course, I have the answer.
Yeah.
But even as you learn to do this and learn about the different ways that property can be bought and sold, it can even be like, okay, so you know that a seller has a coin collection. So it's like, and this is exactly what happened. This is going on currently. So the seller has a coin collection. The buyer wants to buy some of, and there's no loan on it. Okay. The buyer wants to buy buy the property for the price. They agreed on price, but part of that is through the coins. And it's like there was another realtor involved and they're like, we can't do that. It's like, I mean, you can.
No, anything of consideration is anything of value. So if someone is willing to take and you could value a baseball
Right.
card collection,
Yes.
you could use that as a down payment.
Exactly. But I'm just saying, like, getting our minds working in this way is valuable for our career and it's valuable for our clients.
Absolutely. And so buyers, right? So on the buyer side, what's the buyer's motivation? What's the
Mhm.
buyer looking for? On the
Mhm.
seller side, what's their tax situation?
Right.
Are they going to pay more taxes if they cash out? Might there be,
Right.
they might have had a big income year. So selling on top of it's going to create more of an issue for them.
Right.
Maybe they want to put it off to other years. And so everybody's got different
Or we're
situations. But
dealing with a lot of like
Right.
investors that maybe want to liquidate their portfolios, right? To have yeah,
Right.
like once you start to think about this, it's like a puzzle and like a game, and it really is about the client. It becomes less about you, the real estate person, you know?
Right.
finding the resources and the knowledge to allow you to help people get what they want,
Yeah.
Exactly.
right?
Well, I mean, if people wanted to learn more about like where can they get this information? Because I imagine people are watching this and they're thinking, well, I don't know about that stuff. So like where can they find it?
Are you struggling with what is the ideal path for you? What's next for you? There's so many options to try to figure out, and there's so many different ways that you could take your business, but it's all pretty confusing. So our Coach John Kitchens, came up with a short little quiz that will help you figure out the ideal path for you. Go to realestatecareeraccelerator.com, take the free short quiz, and figure out your ideal path. That's realestatecareeraccelerator.com.
Yeah, well, the first place is actually in real estate principles classes that they took. They probably
Oh,
covered some. They probably covered some. These are the classes you
They
take
gotta
when
they
people
gotta
say,
dust off the old book, right?
people say, I don't know why I have to learn all this stuff I never use.
right.
And you know what I always tell, I refute that all the time. People say, oh, I got to take this course, I got to learn this stuff, and then I never use it. Then I go out and learn real estate. That's
Right.
baloney.
Right.
We're
The
gonna
fact
fight
is,
about
You
that
gotta
on next
you
episode.
stay in
keep
the
that book on
business,
the shelf and pull it out and dust it off, right?
you stay in the business long enough, you're going to
You're gonna need it.
utilize all of this stuff, right?
Yep. Yeah.
And so this is all basic. It's all there. And some of the phrases, things you want to know. First thing is it free and clear? Or does it have a loan?
Yeah.
Okay.
Right.
So if it's free and clear, that's a whole nother path.
Yeah.
If
Right.
it's got a loan, the next step is let's examine the loan documents to see what the potential and possibilities are for a buyer.
Right.
So
Right.
that answers a chunk of the financing question. Now
Mhm.
that's to say, well, they could say it could have a due on sale clause, but remember, lenders don't necessarily want to foreclose, and they don't necessarily want to take the loan back. Maybe they do in some
No.
cases, but you're never going to know unless you ask.
Right.
And then
Right.
and then how do you make up the shortfall in the
Mhm.
requirement? And that's where you then look at the next, which we always refer to as seller carryback.
Right.
seller carryback in the form of a second mortgage or a second trust deed, which means it's recorded second, right?
Right.
Or a third trust deed or a third mortgage, whatever that might be, to finance that. And then you get some of the capital still. You need down payments on a conventional loan for the most part. You need it for this type of financing too. Right. But you might get you might need a little less, depends on how anxious the seller is to move the property in this marketplace.
Yeah.
Now, when it becomes more and more difficult to move properties, sellers are going to be more open to looking at some of these types of methods.
I found that it's not necessarily the sellers that are nervous, it's the real estate agents.
Because they don't know, because they haven't educated themselves enough to understand what these things really mean.
Well, and the down payment from the buyer needs to be enough to cover the commission too, right? Or there needs to be some type of agreement about how to get paid.
Yeah, and we had a conversation
that's going to be a separate scenario altogether, especially now with all of these lawsuits, happening. That's something you want to make sure you cover in a separate agreement with your client or with the seller.
And you can carry your commission in paper.
Yeah.
You don't have to take cash from the transaction.
You could take chickens.
Can carry, right? So there's not enough. Back in the 80s, we had deals where there wasn't enough cash to go around.
Yeah.
I mean, it just wasn't enough cash.
I've carried commission like over a year and done like quarterly payments. And you could totally do it. So
now you learn about things like interest-only loans and the way to phrase a carryback in an offer to purchase, right? Like seller to carry back a second in a certain amount at a certain interest rate, payable so much, all due and payable at some certain time, right? The phrasing for the structure of that loan. Now, people will say, "Oh, I'm not going to practice law," and I'm saying, you know what? If you got to talk to your broker before you do this kind of thing. But this is the way
and probably an attorney, since you're drafting up a contract, right?
Yeah,
right. Common. What's happened is people have gotten spoiled, and that's not maybe the right word to use. They have not had the requirement to go look for other ways to do things.
Right.
Correct. So everybody's in their little box and they don't want to get out of the box.
Yeah.
Because it's easier in the box.
Yeah. And the hard part was finding the property.
Right.
Right.
See, that became the hard part.
Right.
So now the hard part's not going to be finding the property anymore for a while.
Right.
It's going to be finding the way to finance the property.
Do you guys cover these topics at the Data Advocate?
We do. When people ask questions about it, we do. Right? We talk about it. So it's important that people start asking questions about this because, again, it's fundamental. I'll read I made up a kind of a rough list before we got on the call. I said, first thing to learn about is what's the difference between an assumption and a subject to.
Okay.
And then what loans can you do assumptions and what loans can you do subject to? And this has to do with liability, Rachel, and who's liable for the loan, primary liability, secondary liability. So what is assume and subject to? What is a second, or what is it? Let's call it what it is, a junior lien.
Yeah.
Be it a second, a third, a fourth, or whatever.
Right.
And we have another term, we say seller carry. Seller carry could be in the form of a primary, a first, but the seller carry could also be a junior lien.
Right.
Commissions could be in the form of seller
junior
carry.
lien. Right.
There are other instruments to help you transfer the title to the property, something like a land contract. A land contract conveys equitable title, but doesn't convey the legal title until the property's paid off. Instead of using a grant deed, you use a title or use a land contract. And then there's something called an installment sale, which is a tax sale, which basically is if you don't take all of your proceeds in the year of the sale, you can defer some of the taxes.
Right.
That's an advantage to some people.
Yeah.
But you know what? When the market was boiling, nobody had to know any of this.
Right.
Right.
It feels like it's been boiling
an all-inclusive. Yeah, it has, exactly. An all-inclusive trust deed, also called a wraparound.
Yeah.
Right. That's another thing. Now, the lenders might not like, but you might have private loans that don't forbid this because we don't know the types of loans. So if we examine and we find out there might be a property that's got private loans on it, where you can leave the private loans on the property. I think I mentioned the car wash. We bought the car wash in 1979 in San Diego, had two this is right after I went to the Fred Crane seminar and learned that the Bank of America could tell us the loan was due, but we could tell them, too bad, we're going to do
Too
it anyway.
bad.
Right. And so I went to his seminar, and it was a $99 seminar, no CE, because there was no CE then, but I was willing to pay 99 bucks to hear this guy tell me a new way to sell property or to buy
Yeah.
property.
Right.
So we found this, the car wash property had 2 existing Bank of America loans on it. We
Nice.
wrapped them. We created an all-inclusive trust deed. Those 2 loans were part of the overall loan. The seller got to keep the arbitrage, the difference in the rate on the AITD and the rate on the underlying loans. That went to the seller.
There you
So there's
go.
benefit there. And not only that, typically as a loan ages, more of the payment is principal and less
right.
of the payment
Exactly.
is interest. So there's an increased yield on an AITD,
Mhm.
typical to a seller that decides that they're willing to do that. So land contracts, all-inclusive trust deeds, installment sales, a tax method, a blanket mortgage.
Mhm.
You say there's not enough equity in this property. I'm going to come in. I'm going to buy this property. I got only $5,000 down on a $100,000 property. I'm going to put my $5,000 down. There's a $60,000 loan. There's another $35,000 here. The seller will carry that, but there's not enough equity. Seller says, I need more security. You say,
Right.
well, I own this car wash property over here. So the security for the carryback, I'll include equity on my other property. That's called a blanket trust deed or a blanket mortgage or a blanket.
Well, what do you say to people that are thinking like, well, this is getting really complicated?
Everyone needs a Saul.
Better Call
Yeah.
Saul.
Well, it is,
Right.
it can be complicated, but it's not complicated. And I tell people this about real estate. It's not that real estate is complicated. It's a large body of knowledge,
Right.
but it's a
It
limited
is.
body of knowledge,
Right.
Right.
right? So it's not that it's complicated. We
It's
can all
narrow, but it's real deep.
and we can
yeah.
understand it if we take a little time. It's not like you have to be,
Right.
Albert Einstein to understand real estate law.
Right.
You have to take the time to read it and think about it,
You
right?
got to
Right.
take the time to
So
read it,
is
dig
it-
out the book, and look
yeah,
at
is
it.
it complicated? Yeah, that's why you're getting paid. I'm worth every penny. Don't you ask me to take less money. I'm worth it. Oh, well, let's do creative financing. What's that?
What's that? Right.
Well, right. Everybody's looking for we're looking for a unique value proposition and really caring about your client situation and helping them figure out what is the best for them and discussing possible
Right.
options that could work is your unique value proposition.
Absolutely.
We used to even use sleeping seconds. Now, I don't recommend people do this, but we did it all the time, right? Where we'd take out we'd get
Bank
a loan
fraud.
from somebody. Somebody would loan us money, and we'd say, "Hey, we're going to write this document up where if we don't pay you, you can foreclose on the property, but we're not going to record it."
Yeah.
And we
It
did a lot of
happens.
that. And then, so anybody go look at it, it looks like, well, you own that free and clear. Well,
Yeah.
not necessarily, right? Because we
Right.
had the second on something else, and so some people have a problem with that. But
That
there are
happens a
many
lot
ways.
with families. You could do that inside of families more
Exactly.
often. That's more common, right?
Right.
I did it
I
with my
think
mother-in-law.
what's that?
I did it with my mother-in-law often, paid her 10%. And it was one of the ways we got funding to go do the things we did. And I had a doctor client.
There you go.
I had a doctor client, and he was a great client. He was the #1 orthopedic surgeon in Denver. He retired in San Diego, and I met him and I sold him an apartment. And then he was always, doctors, he's always looking for more yield.
Yeah.
Right.
Mhm.
And so I would say, I'm going to go. And once I did it once and paid him 10% and paid him back,
He was like,
he would
yeah.
call me and say, Saul, you got any more deals?
Right.
Got any more of
Right.
those things I'm looking, right? So you build a whole nother side to your business.
Yeah, exactly. And most of us have investor clients too. And this is a good conversation. This is a good touch. Reach out to an investor client, talk about these, creative, or what'd you call them, Rachel? Alternative ways.
Alternative ways of financing. Right.
How are
Right.
they doing it? And start to get into the conversation, insert yourself into the deals. Do better. Right?
Right.
Yeah.
Right. And Saul, is there a place where anybody listening can go to kind of get an overview or a high level recap or some definitions maybe of things we've talked about?
I would say, because I haven't done this in many years because the
Yeah.
market's been so good. And I
Right.
haven't talked about it in a long time. Right? And so
Right,
I would say, at the Data Advocate, if you come there, we'll be putting up pieces. If you follow us on Facebook or LinkedIn and you ask a question,
Yeah.
and that's the basic.
Right.
You ask a question, and then it'll kind of say, "Oh, there's all kinds of things we could start writing about and adding to this."
Yeah.
Exactly.
I mentioned last time I need to go out in my garage and find the old acetate overheads that we used to use.
Please
Explain this
do.
to people. And
Right,
so we'll
yes.
post. So I'll do that. I'll find those and I'll post those. I'll put them up on.
We'll scare some of the
LinkedIn.
young agents with an acetate overhead. They're probably going,
What
are
is
they
that?
talking about? What is that? Right.
Well,
Right.
Saul, if
Well, and to your
people,
point about
okay.
if people are looking for places to go for some education on these things, I know that our board that I'm a member of just put out a brand new class on financing.
There you
And
go.
I know they're going to be talking about all the different things because, we don't there would be a reason for a class on, FHA conventional and jumbo loans.
Right.
We're talking about all these different things that we're talking about here that are going to be different ways for people to get people into properties. And that's a brand new class.
Yeah,
Yeah.
exactly. Well, Rachel, if people have a referral for you in Chicago or they want to talk to you, what's the best way?
Best way to reach me is by cell phone at 630-542-8688 or via email at rreal@dealwithreal.com.
Awesome. And Saul, they can go to the Data Advocate. They can, what are the other ways to reach you?
The Data Advocate, thedataadvocate.com, or you can send me an email. Just Saul at bettercallsaul.realtor. That's .realtor. Saul at bettercallsaul.realtor.
Easy.
Or Facebook. I'm on Facebook, and we have a great community on Facebook. It's called Real Talk,
Mm-hmm.
and we've had it since 1995, and so most of the people are like my very old friends at this point, right? But we've got
all people that know stuff. When you ask a question,
and
Right.
you get the right answer.
you
Right.
got people who are real estate trainers and real estate educators
Yeah.
instead of the speculation that goes on in some of these groups online.
And the wrong
Oh, yeah.
information that goes on all the
A
time.
lot of wrong information,
And-
right? So if you want the right information, go to Saul's.
And if you
Facebook
don't want to
page, Real
talk
Talk.
about which of my portrait pictures look the best, go to Real Talk.
Right.
Yeah, because nobody's
Exactly.
right on that one, right?
Nobody's right.
Right,
And
no.
nobody cares.
And no one cares.
What are you
Right.
putting your picture
Right.
on it anyway? All right. Well, I appreciate you guys being on. Thank you.
Thanks, Saul.
Thanks.
Thanks,
Good
Jen.
to see you.
What we need right now is a source for great leads, and I found it. It is called Pipeline Pro Tools. So about 90 days ago, I booked a demo with them. And in that demo, we reverse engineered my business. We figured out how many leads we needed to get in order to get to the closings that we want. And they gave me a playbook to use in order to get that. So I've been using it for 90 days. We've gotten 12 qualified leads, and about half of them are already under contract or closed, which is great. And it is right now my number one source for my best leads that I'm getting. I love this thing. I'm about to ramp up the number of leads that I get with them as well. So, and you might think it's expensive, and it's not. So I was looking for something that's very inexpensive, like affordable to everyone, but also generated great leads. We don't want crap leads. So what you do in order to get this, because I called them and I wanted to partner with them because I was like, this is exactly what our audience has been looking for. So they set up something specific just for us, just for Fight Club listeners. So you would go to pipelineprotools.com/Fight Club. And then you go to the demo, and the demo will show you how many leads you need in order to get the number of closings that you want to get. And then they will give you the playbook that I'm using, my number one playbook for getting leads. And then you can use it too, and we can have happy closings. So go to pipelineprotools.com/Fight Club, book and go to the demo and get all the leads. Don't forget to hit the subscribe button so you don't miss a podcast.